Well, as the Treasurer said earlier, the budget and the economy are, for now, showing no signs of stress from the interest rate rises so far. Now, that was borne out with the strong retail sales numbers out today, up by 0.6% in August and 19.2% higher than a year ago. Of course, that was affected by COVID. But let's bring in here BIS Oxford Economics, Sean Langcake from our Adelaide studio. Sean, many thanks for your time today. Again, here we go. We've got situations yesterday. The consumer confidence remains high. Spending continues to be strong. This is in the face of interest rate rises, which for now, at least, don't seem to be doing the job the Reserve Bank would hope.
Thanks for having me, Ross. We always need to be a little bit patient in waiting for the interest rate rises to have their effect on the economy. And I think you're right that the headline of these data were quite positive, but there are some signs that there is some softness in kind of more consumer durables and discretionary spending components.
So just explain which areas are people spending in and which are they starting to just pull back on a bit?
Sure thing. The growth this month was really concentrated in food-related components. So that was both supermarket sales and also spending at cafes and restaurants. And the pattern over the last few months has been that these have kind of moved in opposite directions. We've switched from buying more for dining at home and going out a bit more. They were both strong this time through, which suggests to me that there's a bit of cost push pressure there. Whether that's through kind of input costs, the ingredients themselves, or higher wages, which have come through from the start of July. Elsewhere, household goods retailing was up, but that's been pretty flat over the last 6 months or so, so not much progress there. And given what we know about inflation, there's plenty of momentum in goods inflation in particular at the moment. A flat retail number suggests that we're actually purchasing a lower volume of goods.
Because the reality is that there are some things that are inside that consumer price index that might be rising in price that we simply have to buy. And I'm thinking about energy's an obvious one that's inside there. And so as a result, there's an increase in spending that we can't avoid.
Absolutely. So if more of your household budget is going into those essentials, it obviously leaves less to be buying a lot of the components that we do see in the retail sales figures here.
And also just a quick one on the Australian dollar, which has been falling in line with other currencies. And the British pound has fallen to an all-time low as they're trying to get through extra tax cuts, which have been really, I guess, recommended against. They're going through with them. Here in Australia, you know, the stage 3 tax are going through. They've been budgeted and planned for. But there's still an argument that if you're stimulating the economy with tax cuts at a time that the Reserve Bank is raising interest rates to suppress demand, it sort of is working against each other.
It is a concern. I mean, obviously, markets have reacted quite violently against announcements from the UK. I think the stated plans of what's going ahead with the stage 3 tax cuts here are well understood and well anticipated. So, you know, we won't see the kind of reactions and the sell-offs that we have in the UK. It's certainly true that the Aussie's falling against the US dollar, but that's true of many other currencies and indeed most of our trading partners. So if we look at the basket of currencies that we trade with, which is, I guess, has a greater influence on inflation and the cost of our imports, you know, we're actually fairly flat over the last few months, which is a little more encouraging when we compare that against what we're seeing against the US.
And the reality is just very quickly and briefly, Sean, is that the lower dollar actually helps to stimulate parts of the Australian economy.
Yeah, it does. It's certainly not bad news for exporters. It makes our goods and services that we offer more competitive with the rest of the world when the dollar depreciates.
Tell you what, it's going to be interesting just to watch its future. And Sean Langcake from BIS Oxford Economics, always good to have you in the program.
Thank you for having me.